You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
Welcome back to the Option Block, everyone's favorite. I hope it's your favorite. It's certainly my favorite bi-weekly source for all things options related. A little bit of options wit, a little bit of options wisdom, some analysis, some education, some unusual activity, and a whole bunch of other fun stuff. Mix it all together and you get the tasty brew that is the Option Block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the aforementioned Options Insider Radio Network. If I sound a little bit different, it's because we're coming to you from the Southern Studios today. No, we're not in scenic Chicago at the old Options Insider Studios. We are out and about down south here. But just because I'm on vacation doesn't mean we're not going to do the Option Block. I love talking to you guys. And also, once in a while, to my cohorts here on the show as well. So even though I'm on vacation, the show must go on, and we shall do it. Unfortunately, that means, though, the way we're set up here, no live stream this week, so I apologize to all you guys who like to tune in and send us wry comments in the chat every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern. Just haven't had a chance to make that work yet here. Maybe for Thursday. There's a slight chance. But we'll see. Probably at the best, we're going to get it going. We'll probably get it going for Friday shows, Vol Views, and TWIFO. So stay tuned for more information on our Twitter and everything else for that. In the meantime, you got to listen to it the old-fashioned way via podcast. I know that's not a hardship for most of you, but c'est la vie. That's what we got rolling here. And, of course, you can still hit us up. Questions, comments, insights, pearls of wisdom, all that good stuff over there at Options on the Twitters. We're at Options on Stock Twits as well. Options Insider on Facebook. And what am I forgetting there? We got LinkedIn. We've got the website. Questions at theoptionsinsider.com. All that fun stuff. If that's too much to remember, just grab our mobile app, available for all the major platforms. And it's all baked in there for you. Remember, we do, in spite of our jokes, we do love to hear from you guys. And joining me on the old program today, my usual cohorts, my partners in crime. Let's start just moving right up the coast. I'm here in nice central Florida. Let's go right up the East Coast there to the hinterlands, to the coast of Maine, where we are joined by the Rock Lobster himself, Mr. Andrew G. from OpsInPit.com. Mr. G, welcome back to the program. And how are things with your more famous cousin, Kenny G?
You mean the guy that plays the, what does he play, the clarinet or something?
The beautiful saxophone, sir.
Is it the saxophone?
The melodious tunes of Kenny G.
But he has that, he's kind of has that weird 80s curly hair, though.
That's not the only weird thing about Kenny G, but we don't have time for that on the show today, even though we could do a Kenny G cast. I think they'd probably get at least 6 or 8 listeners. What do you think?
We might, but I haven't heard much about that guy in a while. He's sort of, I guess he's playing a sax somewhere.
He's hanging out on the coast of Maine in your compound with you somewhere. You got to go find him.
Yeah. That would be a surprise. But things are well in Maine. Things are well at Option Pit.
Glad to hear it. And also joining us from back closer to the old studios, Mr. Uncle Mike Tussaw from RCN Wealth Advisors. How are things in scenic and sunny St. Charles? I'll tell you right now, Mr. Tussaw, it is thunderstorming here in Central Florida, so clearly we lack your weather shield here.
Yeah, you do. And the thunderstorm that we had, we just, I think, sent your way most likely. So We probably are sending more to come based on the weather coming up here, I think.
There you go, sir. And with the team assembled, we're going to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. Like the name implies, this is indeed the portion of the program where we break down what was going on today, what was actually catching our attention, and a little bit of green on the old screen today. Seemed like most of the major indices deciding to take back a little bit of what they lost last week, in particular the NASDAQ. Let's start there because that's been kind of the weird story of the past couple of weeks. If you were listening, particularly to our live stream of Vol Views, not last week, but the week before, listeners, you heard our right towards the end, right around the crystal ball time, start to say, hey, what's up with NASDAQ? It really seems like it's breaking away here at this point to the downside. And that was kind of the beginning of this weird sell-off movement, disassociation, call it what you will, out there in NASDAQ, where most of the indices were selling off, but mildly, whereas NASDAQ was really taking it on the chin again and again and again. It was an interesting week and a half or so. This week, or at least today's session, seems like we are putting that in the rearview mirror, at least for today. I should mention we are recording this, not streaming it live, unfortunately, but we are recording this on Monday, the 19th of June, for all of you playing the home game, and the Qs closing up about not quite 2%, but a pretty good day nonetheless, about 1.7% out there. The S&P, the comparatively lackluster, about 0.8 of a percentage point, and the Dow bringing up the rear about 0.7 of a percentage point or so. All that green on the screen, yet VIX didn't actually take the shellacking that you might think on a day like today. It was actually only ended up down on the day about not even 0.2 of a point, so hovering right around 10 and a quarter or so. Let's see how low it got intraday. Actually, it didn't even break the 10 handle today. It flirted with the 10 handle and then bounced off. It hit 10.01 today before deciding to rally ho again. So all this green on the screen, not quite the VIX apocalypse you might have assumed. So maybe we'll start there, Mr. Rock Lobster. What's your take on today's movement and shellacking, but perhaps not quite the, we didn't see an 8 handle today or anything like that?
All I can think of is the great Don Schlesinger. You've got a almost 1% move in the SPX, so it's kind of hard for VIX to really go too far down. You remember those old days? Like how low do you want vol to go if you have to sell calls and the market keeps going up 1% a day in the index? I want to sell these calls and I'll hedge them, and then I'm going to go scramble and buy them back. So I think for the move we've had today in the SPX and with VIX at 10, I think this is kind of as low as you can really get, to be honest, because the market's still moving. The Qs were up 1.67% today. So those are all, pretty big realized moves, and vols in the bottom. I mean, if the S&P 500 stayed this way for 2 weeks and just didn't go anywhere, then we would see the 9 handle. But it's as far as implied vol goes, we're about as low as we can get with the moves that we're getting. So I don't see a whole lot lower. I mean, we were looking at implied volatility in the SPX in the chat room today. I'm seeing the 5 handle now for volatility in some of the weeklies. So that's pretty low.
That's quality vol. Yeah, you're right. We are in this weird regime, where we have been shellacking it for so long. So maybe in a time when it needs a little shellacking, keep using this technical term, it's already been too shellacked. There's not much shellac left to do. So yeah, you are in this weird kind of scenario where we have seen these pops and spikes and then immediate aggressive sell-offs, and now you're right. We're in a kind of an environment where that sponge has kind of been kind of wrung out. There's not a lot left in that sponge to wring. So it's kind of interesting. We're coming up with all kinds of interesting mixed volatility metaphors here on the show. Anything outside of the VIX shellacking or perhaps lack thereof that really caught your eye in today's activity, sir?
Well, except for this, my favorite thing now going on social media is Jeff Bezos says to Alexa, I need something from Whole Foods. And then Alexa comes back and says, I just bought you Whole Foods.
Yes,
And
exactly.
Jeff Bezos goes, crap.
I think we even said that joke, I think, on Vol Views last week. So, yeah, that's been around for a while. That's a good one. As someone who has an Alexa, I could see that happening.
Yeah, except I guess Bezos works a little differently.
Yeah,
his stuff he buys is bigger.
He's got super Alexa.
So what I thought the most interesting thing was, so they're going to buy Whole Foods. I got it. They want retail distribution. I got it. How that's going to make them more of a competitor for Walmart or Costco or Target or anything else. Apparently that's what all the algos said, and they've been still. And Costco is down again a little bit today. Was it down open? Big down. I don't see how all the people that shop at Costco with those massive carts are going to get the same satisfaction by trying to order Costco type stuff online. You just, you're going to order the 5-gallon bucket of guacamole online. I don't know how that's going to work. But so as far as some retailers go, but what's also interesting is that Amazon is saying at the same time that in order for them to continue their growth, they need a local footprint. So I'm actually slightly counter, it's because I swear I know, especially living in the middle, not in the middle of Maine, but kind of in a relatively, let's just call it a sparsely populated area with no street lights. Just ordering stuff on Amazon is great. I don't think the stuff we go to Amazon for is different than the stuff we go to Walmart for. So that's definitely a play. There will be a couple retailers, but I can't help but think it's the same thing as last week. We joked about this a while ago. Amazon, Taco Bell. Remember in the Demolition Man, Taco Bell won the restaurant wars, and it's like Amazon is winning the retail wars. I can't imagine there aren't going to be a couple more retailers still around. However, I just think some of these are probably a little bit of a buying opportunity. So those are other threads that we had besides just the Qs launching straight up today. But
yeah, it's funny, Taco Bell should win the restaurant wars. It's fine dining, sir. I don't know about you guys, but I always make reservations at my local Taco Bell. It is just a fine eating establishment. But it's funny you should mention, the shellacking of all the other, retail restaurant names supermarket names as well, because I was discussing that with someone today and how we thought maybe some of these things were a little bit overdone. Kroger, you could see, because there is a bit of a one-to-one kind of, competition there. But Costco's almost on a bit of an island of its own. They kind of do their own thing. They have their membership club. You don't go there for a lot of your traditional shopping because you don't know always what they have. You kind of go there and see what they have. There's a little bit of that. I think you can call it that treasure hunt mentality. They like to kind of market. They have the samples. They kind of do their own thing. They have gas. They have everything else. I don't see Amazon really eating into that too much, even though Costco got whacked pretty good as well. So you're right. Maybe there are some buying opportunities in there. Before we way too far into fundamental analysis, because I know you're a diehard fundamentalist, Mr. Rock Lobster, let's turn our attention to the ever-pleasant, ever-sunny 72 degrees of St. Charles, where we are joined by Uncle Mike. Uncle Mike, what was on your radar today, sir?
Well, it's funny, just as you say that, we did have storms today, but now it's 72 and sunny about. So it's funny that you mentioned that and the power with which you have over our weather. A couple things that caught my eye. The first one, of course, is the fruit company, Apple, up a whopping $4 today, almost just under 3% on the day for the gains. Apple's been getting pounded the last few days, and it did come back a little bit today. We do have a position in that in our triple income portfolio at RCM. Nothing huge, nothing like the old days, of course, and the massive Apple hedging that I did at that one point. But we do still have some exposure to it, nothing major. A couple other things in terms of the Amazon Whole Foods deal. I think that's interesting, but it seems to me that when things aren't, wholesalers want to be retailers, retailers want to be wholesalers. Online companies want to have an in-person presence, and in-person companies want to have an online presence. And it seems like everyone wants to be everything. And whether or not this is going to be a good deal for Amazon or not, time will tell. But I think that it's another thing to where I've been in marketing departments before, and if one thing's not moving as fast as you want it to, then you want to do something else. And with that being said, there's also times when everything is just going so good and you think that you have the golden touch and nothing can possibly stop you. I think that the decision of Amazon to get Whole Foods is kind of a combination of, could be a combination of both. I would say more of like the golden touch one, maybe a little bit of the one where maybe certain things in their in-person presence aren't doing like what they would want to do. But in general, they're trying to expand, and then it's one, I don't know if it's the exact perfect fit for them, but I think that's kind of where they're at. Final thing that I do want to say before I turn it back over to you guys, I have a full disclosure moment right here. For the trade I talked about on the strategy block last Thursday, one thing that I did not factor in was the SPY dividend. Now, I've looked back at the trade, and this was my own mistake on it. I looked back at the trade, and I should have looked to see that it was the X date, and a lot of the premium that I was getting was factored in because of the dividend. I still may or may not have made that trade. It was pretty close based on what the dividend was. But I do want to mention that in the interest of full disclosure, and that with the in-depth bid that I talked about that strategy on Thursday, that was one thing that was not factored in. But it's one of those ones where it worked out, and I want to emphasize that everyone is human and stuff like that can happen.
Well said, sir. And now with all of that madness behind us, that SPY dividend, it catches up to everybody. You know, I always joke with people that I don't need to look at a calendar to see when the SPY dividend is coming on, because I check my email. And when all those questions start coming in, how come I got hit on these calls? How come I got assigned on these in SPY? And I see they're all in SPY, I always know, okay, it's SPY dividend time. It catches everybody, even us here on the show sometimes, listeners. So a good lesson for all and sundry here. Meanwhile, let's keep on rolling with the old program. Let's get right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, welcome to the Odd Block, of course, the portion of the show where we break down the weird, the wild, the whimsical, sometimes just head-scratching paper that is lighting up our collective tapes. Let's kick things off, Mr. Rocklawson. People keep asking us. Let's give them a little update. We put out that tracker on our site as well as on social media as well. But you guys keep asking us, those puts still lighting it up? Yeah, they are. Those crazy, weird Tesla catastrophe, whatever the heck you want to call those, bankruptcy, call them what you will. Those Jan 2019 50 puts continue to trade 104 up today alone. So there you go. People keep slinging these, Mr. Rocklop, so they want these puts. They're trading $1.16 at $1.17 today. 27,534 are open as of today. What say you, Mr. Rocklobster, to the continued persistence of these absurd puts?
It's one of the oddest things ever. I think the company's probably fairly valued at $50 a share. So I just assume at some point, every company has to start making money. And they have to start making lots of it to justify their market cap. So, and I think I'm kind of sure Tesla's the only one that's really what I would say is kind of the all green play at this point that's real. Besides, there's First Solar and maybe a couple others, but it seems like they kind of have this horizontal integration into the solar world and batteries and power generation and stuff like that. So the hype is there, but you could go broke shorting it, I think, until it finally falls apart. So, but I think they got the right idea. Don't spend a lot of money on the puts in there. That's for sure.
Yeah, well, I guess get yourself some time. If not get some relevant strikes, at least get some time. So they got that on their side. But you're right. Every company's got to put on their big boy pants eventually. Unless something like Amazon continue to skate for a while. They do make some money now, but how often I heard that old crutch about them. They make no money. They're going to go bankrupt, burning through their VC capital in 6 months. And here we are, how many decades later, and they're still rocking and rolling. Let's move on to our first name here in the old odd block today, our first official name. It's actually appropriate that this one came up on our scans today because I'm actually beaming to you from one of these locations today. This is Marriott Vacation Club, ticker symbol VAC, VAC, and I'm beaming to you right now, excuse me, courtesy of their fine Wi-Fi here in one of said Marriott resorts here. Ticker symbol, like I said, VAC, closing today 126.77, up nearly 5% or nearly $6. So not a bad day here for good old VAC. This is the name that does not a lot of volume, but an odd block appropriate amount, 255 contracts a day. Today, doing a whopping 8,095, about 2-to-1 calls over puts, so not quite the call explosion that you might think. And when you see what went up, you'll understand why. What caught our eye out here today, listeners? One of our old favorites, we like the bullish risk reversal. One of the other things we like, in addition to the bullish risk reversal, is that nice bullish risk reversal with a call kicker, or you can call it a nice vertical call spread financed by puts, whatever you want to call it. We are pro it, and that's exactly what we saw out here today in VAC. We saw the AUG 130, 140 call vertical going up, financed by some nice juicy 110 puts. We saw paper coming in and buying 2,500 of the AUG 130, 140 vertical, doing that for about $3.30, and then turning around and blasting out those 110 puts for nearly $2. So doing that whole thing for about $1.35 or so. Not a bad, $1.25 or so. Not a bad little interesting do here, as we used to say back on the trading floor. Let's go look. Let's go see. By the way, open interest on all these strikes is pretty much nothing. So it's all open in pretty much wherever you're looking. Let's go back and look and see how this name has fared and how we think our friend may fare out here. And Marriott Vacation Club, if you've been watching this name, has kind of had a nice slow and steady rise. They were trading about $60, so probably pretty much right about half where they are right now, about exactly a year ago. It's kind of been a nice slow and steady upward chart ever since then, all the way to where we are right now, which is kind of at the high end of that chart. And our friend here clearly is looking at the options and saying, we didn't see any stock or anything else going up with these. So it looks like our friend here is pretty much saying, you know what? I think this rally ho is continuing, and I want to get up into that nice 130 range, which isn't that far away given today's move. It already moved 5% today. Another one of these moves, and these calls are in the money. So it isn't as crazy. He gave himself a little bit of time, but not a ton. He gave him to August. And he also pulled the old rock lobster move of financed a lot of it. He didn't get the pure juice for free, so I don't know if this would be totally in the rock lobster playbook. He may have to sell those puts 2x, something like that, to get that way. But still, not a bad little setup here. Mr. Rock Lobster, what say you kick us off here? Do you got some love here for our friend doing a nice vertical financed by puts and VAC, or are you going to poop all over it, as the kids say?
Well, I don't know if I'm going to poop all over it. But the other thing is, so this stock was $60 in October, and now it's 126. What the heck is going on in Marriott Vacations worldwide? Isn't it just like a timeshare hotel thing?
Pretty much. A lot of schmoes like me are lining up to pay for these things, I guess.
I guess so. But, it's as far as I think it just buys you some cheap upside. And right now, I can't disagree with anything that likes upside in there. So I prefer those for free, but he didn't go. They're not going super aggressive on the 110 put, but it's a very cheap August 130 call when it's all said and done, I think.
So I was thinking about that. I know you like your juice for free. How would you have finagled this to do it for free? I joked about the 2x puts. I don't think you would go that way. You're not a man, in my perception, to get a lot of naked short units on you. Would you have just jacked that put up a little bit? How would you have made it in your for free manual?
The for free manual on this one is tough. If I had to redo it, I would have picked a slightly more out of the money call. They did the 130-40, which is I think this is a tough one to do for free. Although the 115 put doesn't look so bad either. Because it's giving you an extra $1, and that kind of pushes you over the edge. So then you're getting 115 puts for right around $3 against your spread. So that gets you the spread for about, it's about even. It's 30 cents. It's not too bad. But I think that's the best you can do for August.
There you go. We've already written chapter 1 of your Getting Your Juice for Free book. Slowly but surely, I will write this book for you. And then you just slap your name on it and put it out there, and you're good to go. And then my invoice will be in the mail forthwith. Let's move on to our next name, our next victim here in the old odd block. This is an offender we've talked about in the past. It's been a little while. This is Alerian MLP, ticker symbol AMLP, closing today $11.49, off about a dime, or not even 1% on the day today. If you're not familiar with this, this is a ETF that seeks investment results, that correspond to the price and yield performance of its underlying index, which is the Alerian MLP Infrastructure Index. So there you go. And what's this name? What caught our eye out here today? This is one of the more sizable prints we saw going up today. And it was a pretty sizable roll. In particular, it looks like a nice little short put roll. Our friend coming in and picking up a little bit more time for these puts. It was a size roll on the 12 strike, going from the 12 puts expiring this month on the 23rd out to next month, the straight up August puts. He's blasting the AUG puts 60,000 times for 70 cents on 0 open interest. So he's pretty much opening everything up on that strike. And he's turning around and buying back the puts expiring next week on the 23rd, buying those back for 50 cents. So he's doing that roll for 20 cents. And the open interest on that strike, surprise, surprise, 60,000 contracts. So he's keeping the party alive, keeping the fun alive, and getting another little 20 cents to do just that. Let's keep an eye on this one. Let's go back, dig up the charts, see how things have been rocking and rolling. We have talked about AMLP a few times in the past, and it's been, you can look at the chart, you can probably figure out why. It's been a little bit topsy-turvy, a little bit turbulent, kind of vacillating, not huge price moves, but decent enough to generate a little vol. Remember, it's not an expensive name. It's only about $11.50 name, so it doesn't take a lot to rock the boat out here. This thing's been very choppy, drifting down as low. Well, right now is actually kind of the lows in this 1160 range, and as high as about 1320 or so back in the January, February timeframe. So it's been about a nice, almost $2 range. It's kind of been vacillating in for the better part of the past year. And our friend here kind of drawing a nice aggressive line, or I should say really extending his line in the sand. He decided that 12 was his line, and he's going to keep doing it. It's interesting for a couple of reasons, Mr. Rock Lobster. A, the size is, of course, interesting. But B, he's clearly got puts that are now in the money against him. And yet he's not choosing to adjust his strike. Usually when we see this, listeners, we see people roll. In the case of calls, they roll out and up. Or in the case of puts, they roll out and down. In this case, he's just rolling straight out. So he seems to be very happy with these puts. He's rolling, so he doesn't want to get the underlying ETF, yet he continues to go after this somewhat aggressive in-the-money strike. Mr. Rock Lobster, what say you on our number 2 name here on the old odd block? How does this fit in your Juice for Free manual, and do you like his continued reliance on this in-the-money put, or would you have preferred maybe, you got a bit of a dearth of strike choices out here. You got 12 or 11, that's kind of it, so that could be part of the problem as well. There's no 11.5 strike out here. Maybe he would have preferred that, but still, interesting choices all around here on this trade, Mr. Rock Lobster.
I know this is a name I'm kind of familiar with both of these MLPs after kind of that oil, let's just call it the oil crap out. And you know what, they're down. All of them are down quite a bit actually from where they were. So this is one of those things where I think people are trying to sell puts in there. They don't see a lot of upside in oil. So normally, if you don't see a lot of upside, instead of buying calls, you sell puts. And there's just not a lot to sell in this one right now. I don't know if I would bother selling in the money puts in AMLP, just because of how oil is. It's sort of hovering around, and it's not really generating enough. The 11.5 put, you get 15 cents for it. It's just not worth. It's not really worth selling the puts, especially when something pays a 22-cent dividend, or at least it is right now, and that's a reduced dividend after oil, got kind of shellacked. So, I think this is a tough one. I think they're just buying back their puts and trying to roll them out for a later date. That's all. I mean, that's really all they can do at this point. I don't think they made any money on their original put sale. So I think they're just closing and looking for, they're getting a little. How much use are they getting? Let's see, 50,
20 extra cents.
20 extra cents. Let's say they're doing that per month. That's slightly better than the divvy. That's about all I can say on that one. So
that's damning with faint praise, sir. Slightly better than the divvy. That's
slightly better
say on that one.
It is. So you get 20 cents over parity. That's 60 cents per quarter, and the divvy's 22. So, okay, he's doing a little better if they can get that August sale off for 70 cents. And okay, so they're doing a little better than the divvy, and they do have a little upside if we get a bounce in oil prices. So I can see that trade.
It's not bad, and they clearly have no interest to get long a ton of this thing because they keep rolling. So yeah, and you're right. If they wanted the stock, they could just let these puts go, and they could get themselves some nice juicy stock, get some divvy, but they choose to fight again, sir, and see if they can do better and continue to get faint praise from the Rock Lobster. Let's move on to our final name, our final victim here on the old odd block. This is Pattern Energy Group, ticker symbol PEGI. A good old friend, PEGI. Actually, I haven't talked about this one before, but it's a fun ticker. I got to imagine we'll revisit it again. Closing today, $24.32, up nearly 3% on today's name. On today's trading. This is a name that does, again, an odd block appropriate 237 contracts a day today. Doing about 5,000 and a little bit of change extra. Almost 5-to-1 puts over calls. That should tell you what drew our eye out here in good old PEGI, by the way, if you're not familiar with Miss PEGI and what it is that she does. They are an independent power company focusing on owning and operating power projects. There you go. A lot of wind power, looks like, in here, as well as Canada and Chile. And today, it seems like it was just, as we say, to use a technical term, a put-palooza out here in good old PEGI. Paper just wanted themselves some puts, and they were getting them, and they didn't care what was going on. And yet again, we got another choice of in-the-money puts, which is kind of interesting. We saw the AUG 25 puts. So again, I said the stock closed today $24.32. So these are about 70 cent in the money puts. And we saw paper just gobbling these bad boys up to the tune of about 4,000 and change for $1.45. They picked up about another almost 600 for $1.30. All that the open interest is zero on this strike pretty much. So someone just decided they wanted to gobble this bad boy up. So they averaged in around $1.40 or so, high $1.30s for all these puts when all was said and done. So interesting stuff going on here. Again, not a lot else to parse. All the other strikes are pretty much flat. It doesn't really do a lot of paper out here. Let's go back and see exactly what this name has been up to over the past year, and it's kind of been vacillating around this low 20s level for quite some time. Got as high as, well, this is pretty much right around near the high here today, right around 24.5 is pretty much about pretty close. It flirted with 25 briefly back in September of last year. That's pretty much the high on this name, and they got as low as down into about 18 and change back towards the end of last year. So it has been a nice six handle or so range on this name, better part for the past year or so. And our friend here deciding, you know what? Either he's deeply concerned, and he's got a lot of underlying, which could very well be the case, and he's decided, again, some of the strike selection you have to take with a little bit of grain of salt in these names because they don't do a lot of paper, so there aren't a lot of strikes. It's not like he can come in and buy and choose from the 25 or the 24 half or the 24 puts. He's got essentially 22 halves and 25, so that probably shines a little more light on the strike selection here. He probably didn't want, again, like our friend maybe before too, maybe didn't want a 50 or 70 cent in the money put, but that's his option versus another one that's almost $2 out of the money, so he decided, I guess, to choose the lesser of two evils. Either way, interesting stuff. Mr. Rock Lobster, take us home. What's your feel here? What are you feeling on our friend picking up, yet again, some in-the-money puts, this time in our dear, dear friend PEGI?
You know, isn't this also another kind of a green type company?
Yeah, they have a lot of wind farms.
It's a little greeny.
Yeah, wind farms.
Wind farms. It looks like I see this as put buyers. Did you catch the same thing?
Yeah, we said they were gobbling up puts at $1.45 and $1.30, so splits.
Yeah, it doesn't look like a happy trade for the stock, does it?
It doesn't scream exuberance to the upside. No, it does not, sir.
It does not. I'm looking at any other volume. It's just not a. I'm not feeling happy with this one. There's no, and I'm not seeing any earnings as well. So it's kind of a. Yeah, I guess. Well, this might be just in the earnings cycle. So maybe PEGI is looking for a little bit of a little sadness could be coming PEGI's way. Or a hedge. Either that or hedging along. We'll give that.
Isn't there always sadness out there for PEGI? PEGI has an endless amount of sadness. Poor PEGI. It's been a rough go for her. But you're right. This trade probably wouldn't find its way into the Juice for Free handbook, because one of the times, Mr. Rock Lobster, when you're out there just gobbling up puts willy-nilly, let alone in the money puts.
Yes, willy-nilly in the money puts. And I just there's a little bit of there was a little volume on the calls too. It just looks like somebody sold a lot more puts. Somebody bought a lot of puts, but then again, somebody sold a lot more than they probably wanted to.
All right, listeners, that's going to do it for the odd block. But it's Monday. It means it's time for you guys to take the reins. It's time to open up the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
Welcome back to the Mail Block, the portion of the show where you guys take the reins and carry us off into all sorts of crazy and interesting directions. Got some of that in store for you today. You guys know how to hit us up at Options on Twitter and Stock Twits, Options Insider Facebook, questions at theoptionsinsider.com, or just head on over to the website. There's a feedback form. A lot of you guys like to use that too. If we were live, you can hit us up live. We're not live today, so unfortunately that's not going to work. But you can hit us up via the old app. It'll have all that broken in for you. So it makes it really easy. Just go load up the app, hit the button, say, hey, I want to call the studio, or hey, I want to send an email to the Rock Lobster. That won't be in there, but we could forward it for you, and all sorts of other fun stuff. And we'll get your your question routed to the appropriate show. Before we dive into all your questions, we like to ask you guys some questions too. We asked you guys last week. We said, hey, last month, 40% of you said VIX wouldn't break 9 in 2017, but recent events have us asking again, how low will VIX go in 2017? So a little more VIX limbo. And the lion's share of you still saying 60-odd% saying still won't break 9. With the rest almost 20% coming in saying it was kind of a weird schism there. The most of you saying still won't break 9, but about almost 20% saying look out below the 7 handle in 2017. So nice little diversity of opinion, and the rest scattered in that 8.5 to 8 range. We also asked you last week, which was kind of interesting, going into our TWIFO show, which futures options products are on your mind and in your portfolio right now. And you guys, we gave you E-mini, so the E-mini S&P, obviously, the gold, crude oil, or FX and rates. Almost two-thirds, almost a third of you said E-mini S&P, about 37%, so a little more than a third. And then 26% coming in on the old crudes, and then 21% saying other, so your FXs, your rates, et cetera, and so on and so forth. And then 16% coming in last. Gold coming in last. I thought gold would have a little bit more love there. That kind of surprised me. This week, we went back to the commodity realm, but this time, shall we say, a commodity of the more dubious variety. We asked you guys, and we posted this right before showtime. You guys are already piling into this one, so you're loving it. We asked you, hey, everyone's talking about Bitcoin vol these days. So where do you guys stand on good old Bitcoin after last week's, shall we say, aggressive downturn? We gave you 4 choices. We said Bitcoin is just too volatile. I'm out of this thing. Or you said, hey, I'm still bullish, even though this thing got shellacked last week, to use yet another technical term. Or you want some Bitcoin options to finally be listed. How nice would it have been to have a nice put in your pocket last week, even though those things would have been ungodly expensive? It still would have been better than what we had probably last week. And then we gave you the final option of, I'm sick of Bitcoin. This thing's already getting a lot of love. It's only been up for an hour. It's got a ton of votes already. Let's start with Uncle Mike. Uncle Mike, what are you feeling on this one, and what do you think our audience is feeling here?
Oh, man, I didn't even know Bitcoin still existed, quite honestly. I would say that I think our audience would have liked to have had some type of option on it, because our audience is very active with their trading. We have a very diverse trading audience that's very smart, I think. For me personally, though, I've had enough of Bitcoin. I never wanted to get into it in the first place, quite honestly. So I will say audience puts, me, don't want anything to do with it.
I'm with you, even though it is like the best performing asset in like history for the last year or two, I think, up with some ridiculous percentage. So it's kind of hard to ignore, and certainly with our audience hitting us up the way they are with Bitcoin, we can't ignore it either, even though I'm kind of with you, Uncle Mike. I probably could take it or leave it if I had my way about it. Mr. Rock Lobster, same question for you. What are you feeling? What are you feeling here? What do you think? What are you feeling? What do you think our audience is feeling?
Well, I thought at the beginning it was a little bit like the tulip bulbs, and then, we had it started rallying when we ever had those kind of currency crises. I think the Cyprus, remember we had that a couple of years ago, Cyprus was falling apart and they had capital controls. I think Bitcoin went through the moon. So it seems like, but I'm not quite sure that it's almost I don't know if referendum is the right word, but a referendum on, on currencies. I guess there's just people believe in it. That's the only thing I can think of. Am I bullish on it? I don't know how to value it because I don't know how to value it. But then again, there's no Bitcoin debt. The government of Bitcoin doesn't owe anybody anything. And it's had a lot of kind of spectacular washouts. Wasn't a Bitcoin exchange that?
Yeah, Mt. Gox a few years ago pretty much went belly up and took half of the value with it.
And the thing, it's kind of resilient. It doesn't die. So I think it's not a tulip bulb thing, although it has some of that to it. Probably, month to month or weekly trading, it probably is like that. I think Bitcoin options would be interesting and fun to trade. The problem is there's no underlying, and as we all know, when there's no underlying, it's very hard to trade. Options never really do well on something without a physical underlying. So to me, am I bullet? It's a volatile thing. I just kind of stay away from it, but I look at it because it still attracts a lot of interest. And I think as a proxy for currencies and as I think central bankers for the last 5 years have been totally unhinged on what they've been trying to do. It's all a lot of flim-flammery, and I know we've talked about that many times. The market doesn't seem to care, but I don't see how you can keep doing the same thing over and over again forever, because eventually people lose confidence. So, but I think that's part of what Bitcoin is. There's a lack of confidence in sort of the G7 central bankers, and that lack of confidence buys Bitcoin, and it's probably bidding it up. So I will say the public wants Bitcoin options. To me, though, I would just say it's too volatile, and I'm out. That's what I got.
Interesting. A long way around, but I like where you're thinking there, sir. Yeah, you're right. This thing had just in the hour or so it's been live, it's got almost as many votes already as some of our other polls have after a couple of days. So, yeah, it's interesting to see. There certainly is interest in this thing, pro and con. Clearly, the con is strong as well because nearly half of you, 46% so far in the early voting, again, it's only the first hour or so, saying I'm sick of Bitcoin. 32%. Again, as in keeping with our audience, I would expect nothing less, saying I want some Bitcoin options. And how nice would it have been to have a listed product on there? You're right, Mr. Rocklopsy, you need an underlying. People are flirting with ways to get around that. There are some Bitcoin indexes I've seen coming out and things, and CME is filing for patents on different digital blockchain type products that they can use. So again, that'd be blockchain, that'd be the underlying technology as opposed to the Bitcoin itself, but they are trying to bring that. Maybe we'll see some Bitcoin products and even index or two using blockchain, how ironic, to trade in the near future. So people are trying to get a handle on this because how often do you see a product that is clearly capturing the imagination, capturing a lot of interest? People are buying it, even though it's effectively, I think even to call it OTC really at this point is kind of misrepresenting it. It's kind of just in the ether of this product. And so that's hence all the crazy swings we've seen. Surely if it was a listed product on an actual exchange, these swings would be tamped down a bit. You'd have some hedging you could do. You have a lot more choices in there. But still, interesting stuff. 14% saying, following the rock laps, just saying, it's too volatile, I'm out of this thing. 10% saying, I'm still bullish on this. So even though the thing's got to, shall we say, had its wings clipped pretty aggressively, it's still, and these numbers are changing. People are coming in and voting as we're talking. So keep the party going. If you're listening on the podcast, and all of you are, because you can't no live stream today, unfortunately, then head on over there to add options and make your voices heard. Looks like a lot of you already have done so, but keep it going. We'll probably get into it more on Thursday's show as well as on Friday over there on TWIFO. TWIFO seems to have become the de facto Bitcoin show on the network for some reason. All you guys writing us into to TWIFO with questions about Bitcoin. So I got a feeling we'll be talking about that. We also talked on that show recently. Had a great chart. Maybe I'll send it to you, Mr. Rocklop. So you too as well, Uncle Mike, on that show. Someone sent in a great chart of just how many massive cutting in half or more events Bitcoin has had just since 2010, and there have been about 7. Where or not more, where the underlying asset has lost 50 to 70 or 80% of its value over the span of a couple of days or a couple of weeks. So yeah, it's not exactly for the faint of heart, but if you can handle that, then it may be an interesting product for you. And hopefully we'll get some more listed stuff on it, and we can trade some real products sometime in the near future. We got Production One chiming in here. He writes in a lot saying he doesn't like Bitcoin. He says SPX and VIX are far more fun. I got a feeling Uncle Mike and the Rock Lobster will agree with you on that one. So there you go. He's clearly an acolyte of YouTube here on this one. All right, we got here's an interesting one. Just came in from EJH4Izu. So not exactly the most pronounceable handle, but he asks, "Hey, I got a question for the option block." Well, right show. He says, "What qualifications do I need to work in the industry as a professional, i.e. as a trader? Is that a career path I'd even want to consider?" That's a lot of questions in there that are interesting. We got a little time. I think we got enough time to tackle this one. This is a rough road, as you said before. The avenues that I took to get into this business and the Rock Lobster are not really avenues you could take anymore. You can't really just come out to Chicago and say, hey, I have an interest in this. I have an affinity for finance and some mathematics. Take me under your wing as a firm, train me on this as an assistant trader, and then after a year or so, when I've proven my worth, commit a lot of capital to me, back me, and I will go out and trade and make fortunes for yourself and for me. That route doesn't really exist anymore. The number of firms who are out there picking up picking up new traders and training them, you can count them on one hand. And as a result, there's been a huge just diaspora of guys who are extremely experienced traders here. Chicago's a great example. You have a lesser degree in New York and some other areas as well, where guys are really experienced. And there aren't a lot of firms out there making markets or trading, doing what first of all, the way Andrew and I used to trade, which is delta neutral, that trading style is gone. You can't really do that anymore. It's not viable. You have to take risk. And usually these days, that's Vega risk. Sometimes it's delta risk. Sometimes a little bit of both. But you have to take a little bit more risk. Hence, most of these guys are now what are called prop traders, not really straight up market makers anymore. So that kind of lifestyle and that way of trading has kind of gone. That said, Mr. Rock Lobster did create a market maker recently, so I'll let him speak to that a little bit for himself. And so that's a challenge in and of itself. The way style is changing. And then B, let's use the Chicago example, because we get hit up, and I get hit up, as you might imagine, on our network and privately in and around Chicago. I'd say conservatively at least a few times a week by people in and around Chicago who are current or former traders who are looking for their next thing. In fact, I started a whole nonprofit association devoted to all of this. And the number of firms that are out there hiring these kind of guys they're just fewer than there were, drastically fewer. And the ones that are out there are much smaller. So to say that this is some sort of great viable career path, it's a challenge. And plus, on top of that, if you come to these guys and say, hey, I was an active, I don't really know your background, Mr. EJH for Isu, let's just assume you're a very active retail trader. You've kind of groomed yourselves on shows like ours and on trading in your, let's say, TD account or IB or wherever you trade. It's hard to go to a prop firm now and say, hey, look at me. I got this great track record as a retail guy. I want to come in and I want to become a trader for you guys. Because, quite frankly, you're competing with all these guys in and around Chicago, for example, who have decades of experience on the floor, who are fighting for those same jobs. So it's a challenge for you. On top of that, it's very much a seller's market now. All these firms, the handful of firms that are hiring traders, they can demand almost whatever they want, and they can get it usually. So they're going to say, I want a guy who not only understands trading, but also has these level of advanced degrees and certifications. So they want probably a master's in finance, if not a PhD in quantitative development and mathematics and everything else. So they can come in and you can be kind of a double duty guy for them. You can be not only a trader, but also develop their models and handle their quants and everything else like that. So they can ask for that and they can get that. So it's a very challenging environment these days. If I can tell anyone who's going to get into it now, you have to start really almost on a pure mathematical or scientific basis. That's who a lot of the firms who are recruiting. They're hiring those guys and then instead trying to teach them the trading side rather than the other way around, taking a trader and trying to teach them the advanced mathematical and modeling side, because it's just those two things are not always compatible. So there's a lot of things that could be impediments to you. I can go on, but before I go on, Mr. Rocklopsy, you guys, I don't want to be too dire, so you can be the voice of light, which is kind of surprising for a change of pace for you. You have created a newly minted market maker within the past year or so, I'd say. So walk us through that process of what you did and what that guy is out there doing, and if our friend EJH4Izu was interested, what he could do.
Well, I think the financial engineering thing is probably the best route, because they want, it's so electronic and it's such a video game at this point relative to how it used to be. That's just part of the job qualification now. So I would say, yes, get a financial engineering degree, maybe even a master's, something like a master's in some sort of advanced degree in, in higher math, calculus, whatever. Understand some financial modeling. That would be a start. As far as a market maker goes, it's kind of the same old market maker stuff, although it's just different. It's a lot more position trading than it used to be. Special situations and stuff like that, where it's what I would say it is way outside the pale of anything we talk about on this show retail-wise. It's just without margin and kind of the access that market maker kind of has advantages in certain types of trades. But there's still some edge to supply some quotes when you feel like it. So there's a little of that, and there's still just there is paper on the floors still. So there are guys in pits. There's just not a lot of them. There's only one or two. And they're just trying to get parts of the order flow that's there. So it's definitely a different environment. The competition really comes from the electronics and the screen. But I would say if you want to work in the industry as a professional, also, there's still a career path as investment advisor or, something like that, but you have to understand how the options work first. From my experience, besides what we do to help people actually learn how to trade them, it's very hard to learn how to trade options. We service the high end of person, or the person that really wants to learn pretty well. I don't think I think that's an anomaly for the most part. Like, it's very hard for somebody to sit there and want to teach you to trade options at this point. And I think a lot like Mike, I think he came from the school of hard knocks, trading options and understanding how they work the old-fashioned way. And I don't know how easy that is anymore. Now, there are still trading groups around, but they want people that are probably more quantitatively bent, as opposed to, when I started, in 1989, was kind of a while ago. It's just a totally different environment. And you need capital and you need electronic access. I mean, it wasn't a stretch of the imagination to say you could start trading options in the late 80s and early 90s just, with a credit card almost. I know that sounds crazy, but you could just get on a floor and get a clerk job and kind of do it that way. So that is definitely gone. So yes, you could probably just do a Google search for firms that are specialized in option trading, get yourself a degree in mathematics or any kind of logic, and on you go. But as far as sort of the old floor trading type stuff, it is very, very sporadic. At this point, you would really need to know what you're doing to get yourself into that slot, because you just, it's not something that's very easy to learn on the fly anymore.
I've worked with throughout my career. I think I'm the only one in existence in the world right now that's in this profession that hasn't traded on the floor at some point, it feels like. and I've been around for, almost 15 years now. And so a lot of people that started off trading on the floor. I mean, I was very fortunate with how I got into this business with my job at Options Express many, many, many years ago. And I got to work with, there was one guy at my firm that I got to work with. He was actually on the CBOE. He was a trader at the CBOE. The first day it was there, that's how long he had been around. And there's a lot of people that I got to work with that were all the same common denominator, a former floor trader in one way, shape, or form. And just as time went by, everyone was surprised that I wasn't. And I was just in like this weird fraternity. I was just kind of like the guy that was still there in a lot of ways. But with that, like Andrew said, I learned through the school of hard knocks. And the only education people that were around when I first started were people that you could learn some things from, but it was back in the day when you'd pay $3,000 for a seminar, and at the seminar you'd be upsold for another seminar. And thankfully I never paid for one of those. But with that being said, I think that if you are looking to get into this and establish a track record as a trader in one way, shape, or form, the route that I went was through that of a financial advisor, like what Andrew had said. I'm one of very few people that actually works a lot with options for retail clients. Most people that have the option knowledge base that I do that are in the financial advisor set, they'll have several $1 million as a minimum for their clients. And so I don't have that. I have no minimum, never have. And so I'm kind of an anomaly with that. So I think that if you're looking to get into this, there's two things with which you're going to need to have. Number one, a good knowledge of options. And number two, you're going to have salesmanship skills in some way, shape, or form. If I go out there and say, I made 400% in 2 months doing this option trade, well, even if I'd love to personally make all that kind of money all the time. But the reality of it is that unless you are just going after the total get-rich-quick crowd, you're going to need to have some type of people skills even to sell something like that, even if that is something like that did exist. So if you're looking to break into the business, I think the path the path that I took was through the route of a financial advisor. And I don't care how good of a trader you are, if you don't have some type of salesmanship skills in some way, and educational skills. What I mean by that is explain what the heck you're selling. Just today I had a client that he's going to have there's another guy calling me. He's got, I don't know, a bunch of money but he knows absolutely nothing about options is what the client told me. And he's referring his buddy to me that knows nothing about options, but says he has lots of money. I have no idea what it's going to be, but what the skill that I'm going to have is to explain to him what I do, how I do it, and also have an understanding of what the benefits and drawbacks are to everything with which you do. So long story short, if you're looking to get into it, the way that I went was the financial advisor route. And you have to understand beyond options as well. You have to have an understanding of IRAs, retirement, that type of thing. So I would suggest if you're looking to get into this and do this full time, you're going to have to get a base of clients and have an understanding of the full spectrum of financial planning as well as options.
So I think you can tell Mr. or perhaps Mrs. I think it's Mr. EJH for Izu that we can probably go on. We went on for a while about this. We can talk about this for a while. It's a topic that's near and dear to all of us, and we all come to it with a little bit different perspective. Andrew and I a little bit closer maybe than Uncle Mike, who, as he mentioned, had a bit of a more alternative route into the business. I like what you're saying about the RIA. I have sent a lot of guys that route over the years. I know a lot of experienced former floor traders who are now RIAs or they're doing some sort of asset management. The problem, as Uncle Mike alluded to, and the problem a lot of these guys encounter is that gets into the realm of having to gain AUM, gaining assets under management. A lot of these guys who are the best traders, not necessarily the best salesmen. And a lot of the guys who are the best quote-unquote fund managers with the most AUM, they're great salesmen, not as necessarily great traders. So you think there'd be a mix, but unfortunately, a lot of these traders, they don't want to pull away from their screen. So that's sometimes a challenge for them. As we mentioned, Andrew and I, the old way we took into the business, pretty much dead. If you want to go that route, you got to go the high-end modeling, mathematics, quant route. So if you're okay with that, then that might be a route you want to consider. Again, it's a lot of schooling, a lot of time investment. I don't know how willing you may be willing to do that. And if you like what you're doing right now, you're an active retail guy, you have another job, but you're making decent money on your screens trading options. Nothing wrong with keeping it that way. That's a good, it seems like it's working out for you. I don't want to leave you entirely on the dire note, though, so I will give you this little nugget as we wrap up here. That I had Jack Schwager on the network a few months ago. You may know that name. He's the author of the seminal Market Wizard tomes, and that's one of the books that first brought me into the options business many, many years ago. He had a profile on Tony Saliba that I read and kind of got me interested in this space, and the past is prologue, as we say. But he has a new venture called Fundseeder, Fundseeder. Just go to fundseeder.com. You sign up, register, and what that helps you do, and the whole goal really is to help guys like you who are maybe skilled, active retail traders get noticed, get discovered by people who might traditionally invest in a fund. So that helps ostensibly go around a little bit of an end run around that whole challenge of gaining AUM. You have to log in. It'll help you create a track record using your brokerage account, so it's all verified. So go check it all out and see if you like it. And if you do, maybe that's a route you could go. So there we go. We have one little positive nugget for you amidst all the dire info. And all right, with that, we're going to keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, welcome to Around the Block. Like the man said, this is the portion of the show where we break down what we're watching for the rest of this week. Since we kind of talked a lot in this last one, we're going to make it a combo segment. We're going to make it a combo Around the Block. And what do you have cooking? Let's start with you, Mr. Rock Lobster. What are you watching for the rest of this week, and what are you cooking up over there in the land of the pit?
What am I watching? Still tech. See if we can. I'll be really interested to see how this Amazon retail thing shakes out, because once you start putting footprints down, I think the businesses are going to change a little bit. Because right now Amazon has a pretty hefty multiple. I'll be interesting to see if it can maintain that. And also we have a VIX class on Saturday, or Saturday class. So if you want to understand how to trade VIX, how to actually position with it and use it as a tool the way it was designed, sign up for our Saturday class. Go to optionpit.com /events page and just click right on the events, and on you go.
There you go. Check it out, optionpit.com. And last but not least, Mr. Uncle Mike, when you're not out there gaining AUM with all these high net worth clients, what are you looking at for the rest of this week, and what's coming up for you?
2,500 on the S&P, 8 on the VIX. We'll see. Those are the numbers that I want to see if we're going to hit in some way, shape, or form. 8 on the VIX is going to be a tougher one, I would think. But just looking at the numbers as always, and then in terms of what we have to offer, if you are a retail trading client and you're looking to get rid of that darn ticket charge, give me a call, 312-212-3531. We have the ability to trade for 35 cents a contract with no ticket charge. We have multiple brokers with which we work with. We charge a small fee, of course, but it's not based on commissions. It's just based on a fee. Or feel free to email me at mtosaw@rcmfs.com.
All right, and that's going to do it for us. On behalf of Uncle Mike and the Rock Lobster and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show. And, of course, for sending in such great and thought-provoking questions. You can take us off on all sorts of fun tangents, and we love it. We wouldn't have it any other way. Keep those coming, and we'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.